which is focused on asset management in emerging and frontier markets. And we have two very interesting guests joining us, Mattias Martinsson, who's the founding partner of Tundra Fonder AB, and Ali Hussain, who's the head of research for frontier and emerging markets at Fim Partners. So why don't we start out with both of you introducing yourselves and telling us a bit about your fund's investment thesis, what you do, and why you're excited about the markets that you're excited about. And we can start with Mattias.
Sure. So hello, everyone. So I'm one of the founders of Tundra Fonder. We started our global frontier fund about 7 years ago. Today we manage around $180 million. So we're the typical frontier boutique. We have team members here in Stockholm, and we also have team members in Karachi and Ho Chi Minh City. For us, frontier, I think everyone has their own definition. For us, frontier is about early emerging markets. And we prefer to look at the World Bank's definition, differentiation of income groups of the world. You have high income countries, you have higher middle income, lower middle income, and low income countries. And Tundra focuses on the two lowest categories. That is around 3.8 billion people, 50% of the world's population, but it's less than 5% of the market cap in the world. And then we do thorough stock picking in 7 to 8 countries at the time. We were early on, I think maybe because we're Scandinavian invested, that applying a very strong emphasis on sustainability because it's a requirement among institutional investors in Sweden. So we have dialogue with all our portfolio companies. We have questionnaires and we have ratings for all the companies we invest in. We apply our own carbon calculations for the companies, and we guide them throughout the way. So that is an important aspect for us as well. And I think the reason why I kind of ended up doing this is because I started with Russian equity market in the mid-90s by coincidence. And I ended up at the firm that pioneered Russian equities. And Russia in 96 was a very early frontier market. And I think once you kind of got hold of that and we started the first Russia fund in the world, then it's no way back. So since then, I was always kind of more intrigued about the kind of the lesser known market opportunities. And we're building Tundra based on that, basically providing access to inaccessible markets to every investor that is interested in it.
Wonderful. And Ali can go next and introduce yourself.
Thanks, Nick. I'm Ali Hussain, head of research at Fim Partners. We are based out of Dubai with offices in Riyadh and London. We currently manage approximately $2 billion in assets under management, of which approximately 200 million is currently deployed in frontier markets. In terms of background, the firm has been investing. Our strategy is almost 8 years old. Similar to Mattias, we don't use the MSCI or S&P index definition to consider frontier markets or our investable universe per se. The reasons, again, same as Mattias, I think that, one thing about these indices is that they are based on a model of capital market development versus economic market development. And it is the economic market development that we are more, focused on in this case. Again, similar to what Mattias alluded to earlier, we are focused on responsible investing. That means we look at sustainability or ESG factors when making our investment decisions. What attracted us to these markets, I guess, is twofold. One is the growth potential. If you look at where frontier markets are today, whether it be on the economic growth scale, these are some of the fastest growing markets in the world. And the other factor which makes them very attractive. I'm sorry? Okay, sorry, carrying on. So these are some of the fastest growing markets in the world. And more importantly, these are some of the youngest populations in the world. And when you compare, whether it be the ownership of durable goods to consumption of pharmaceuticals or, factors such as cement per capita, these are a very steep discount to where emerging and developed markets stand. So hence, there is a substantial growth potential with this young, vibrant population, whereas the developed world is currently going through an aging process where consumption will eventually recede considering the aging status of the population. So it's a very exciting space, and we look forward. I look forward to answering more questions about the space and the strategy.
Sure. So I think that a lot of those macro factors you mentioned are very interesting in general when it comes to frontier markets versus emerging markets or just more developed countries. More particular to this year, I know that both of you are very bullish on some of these countries, and I just was wondering if you talk a bit more about how some of these countries you've invested in have responded to COVID and what that means, going forward for your firm. And I guess Ali can go first on this one.
Sure, thank you. I think the initial perception when COVID broke out, and when we were at the peak of the situation in March, the initial perception was that this would stem disaster for these economies because, one, they do not have the fiscal buffers that the developed markets do to stimulate the economy. And number two is the healthcare infrastructure in these markets, right? When you compare on, say, number of hospital beds per capita or available of critical care facilities, etc. But I think one thing that mainstream thought process did not incorporate is that frontier markets are very resilient in terms of dealing with crises, whether or the concept of economic lockdowns. If you go into the history of countries such as Pakistan or Bangladesh or even the Philippines, where weather-related catastrophes tend to be quite severe and can be halt different parts of the economic chain during the course of a year, the populations in these markets tend to be prepared for these sorts of things. And there's a concept of money under the mattress, which means that despite the low levels of financial inclusion, a lot of these economies the savings are actually literally under the mattress, as they call it, and they can be deployed very quickly in times of crises. The other thing, as I mentioned earlier, is the health standards of these economies. And if you look at the global health indices, they typically rank at the lower end, whether it be air quality, water quality, etc., which means the immune systems of these populations tend to be much stronger. And a good example of this is that frontier markets still deal with illnesses such as malaria and dengue fever, which are unheard of in the developed world. So these have allowed these markets to not only battle the initial first wave, but they've also been able to bounce back much faster. If you look at the performance of markets such as Pakistan, Vietnam, Nigeria today, they've actually outperformed the S&P and MSCI World since the end of March. So I think the COVID resistance on its own was a good thing, where they were able to weather the storm. But I think the long-term growth prospects in terms of the long-term investable themes still remain intact.
Sure. Mattias, do you have anything to add to that?
I think Ali summarized it very, very well. Early on, we had here in Sweden, we mentioned the difference between a Swedish barber and a Pakistani barber. And just as Ali said, that in Sweden, it was a complete shock to all kind of the small shopkeepers when you entered a lockdown. Whereas in Pakistan, they had throughout the last 20 years, they have many occasions where all businesses stopped for several months. So I think that money under the mattress and being accustomed to these interruptions is something that probably saved us. I think the other part is obviously that in many cases, take Pakistan as an example, they couldn't afford a complete lockdown because you have so many day workers who are completely dependent on the daily work in order to feed themselves. So I think they didn't have any other option than to kind of do a gradual and kind of less extreme lockdown. I think that also helped them. And we see that now, of course, in the economic numbers. So I think despite minimal fiscal stimulus outside lower interest rates, they didn't really have the weapons, they didn't really have the healthcare systems, but I think they're being accustomed to these events from the past helped them a lot. And they've weathered the crisis, I think, much better than most investors expected.
Great. And now I'm going to take a bit of a step back and just allow you to explain what you do for people who may not be familiar with the asset management model. So first of all, the first part of it would be, where do you get your funds? Whose money do you manage? And then secondly, what sort of investments are you making in these markets? And Ali can go first on this one.
Sure. So our investor base is primarily institutional. We manage money for large sovereign wealth funds, university endowments in the US, pension funds across Europe, and some of the sovereigns and quasi-sovereigns based out of the GCC region. This is actually done purposefully because our experience has shown us that retail investors can be a bit fickle and more attuned to short-term drivers, whereas our strategy is based on a long-term investment horizon, which we feel is more attuned to what institutional investors. It tends to be more sticky money, more stable, and they tend to have a more it's more patient capital to begin with. In terms of the strategy, what we're investing in, it's all equities, although we do have a fixed income team now, which is investing in frontier fixed income and emerging market debt. For us right now, I would say the two countries where I think the most potential is, one, of course, is Pakistan. I think Mattias and I will both agree on that one. And then I think the second one where we're a bit more non-consensus is the Philippines. Again, Philippines is one of those markets which is classified as emerging, but again, we see a lot of frontier market traits there, whether it be in the form of the share of modern retail versus traditional retail, consumption of packaged food versus non-packaged food. And again, on a grand scale of things, I think the fiscal picture of the Philippines is much stronger when it comes compared to economies such as Pakistan or Bangladesh. So hence we feel where, the market has been unduly punished. Unfortunately, it's also known as the orphan of ASEAN because of the region it's sitting in. But then again, we think the opportunity potential there is very great. And there's some great investment opportunities there.
Yeah. And I think we would be almost the opposite to Fim on that aspect. Swedish investors are known for having one of the highest mutual fund ownership in the world. So Tundra actually started as mainly a retail investor with all the fund platforms around the world. So I think today we have around 60,000 clients spread out throughout mainly Sweden on that. It would be retail investors would be around 80%, and institutional investors, which we actually started to approach only in 2019, is around 20% today. Our fund is daily traded. You can invest $2 if you want. And then our idea from the beginning was kind of, as I said, to start with, to make inaccessible markets accessible to anyone, and to try to do that with quality, so that you, as a unit holder, you could, if you only want to risk a small part of your money, you should be able to do that. So that's how we started, and then gradually, as performance came along, we caught some interest from institutional investors, but that is still a very small part of our business. And I think, just as Ali says, that one of the markets that we believe most strongly in is Pakistan, and it's, for us, we do rarely macro calls. It's all about the companies that are there and what is priced into their valuations and not. And at the end, it's about corporate quality. And I think Pakistan, having had an equity market for more than 100 years, is one such country where you have a larger number of good companies listed, because the equity market has been around for longer. So it's easier for us to find the quality companies there. Another market that we also like is Vietnam for different reasons. It's a younger equity market, but it's also a big equity market with more than 1,600 companies listed. So it suits us and our stock picking when you have a lot of listings and you have decent liquidity. And the third market that we actually like, but I think very few investors like, and again, not because the short-term macro opportunities, but rather because of the corporate qualities, Sri Lanka, which has had a super tough time with the COVID crisis and large foreign denominated debt, but where we do see some good long-term investment opportunities. And I think more than anything, it's very abandoned by almost all frontier investors around the world.
Great, very interesting. So I just want to let the audience know that we may have time for 1 or 2 questions from the audience. So if you have any, feel free to share them in the chat. One follow-up I'd like to ask to both of you is, you mentioned, investing in companies themselves. Ali had a bit more of a macro perspective, but when during that, I'd be curious to know, what is your research process like? Do you have people on the ground in these countries, or what? How do you decide what is a good company? Where do you get the information? And Mattias can start with this one.
Sure. We've had, in Pakistan, we've had a research office since 2014. And I think the reason for Pakistan there is that, I think, first of all, that we saw a big opportunity there. There are a huge number of listed companies, and we concluded that it was a market where it was worth having our own people on the ground. We also have one analyst in Ho Chi Minh City, and I think for the same reasons that in Vietnam you have some problems with the language barrier sometimes, and I think for us it was important to get better access to that market. I think for us, when we look around the markets where we cover today, and if we include some new countries in the fund, which is Indonesia and Philippines, there are around 4,000 companies listed. And since we started looking at the turnover in the fund, we've had investments in approximately 200 of them. So I would say that we've done our screening process decently over these 7 years. What we do look for, we have a certain key factors that we look for. I think the most important is the management and who owns the company, and whether we believe that we can trust them so that we can participate in their growth as minority investors. The second part is that we want the company to be involved in a sector which we believe will be more important in the future than it is today. We call it structural growth. So you get the GDP growth and you get the GDP per capita growth, but you also have a sector which will increase their share of that growth. And the third factor that we look for is that we want there to be a logic for society to benefit from the company's success. So it means that I think that comes back to ESG, that in the long run, in these markets, you have huge regulatory risks in terms of taxation, the new regulation, etc. And I think if society in a clear way benefits from the company's success, those risks become less, and that makes it a more safe investment for us.
Great. So we're getting a lot of great questions, but I'll have Ali give his answer to the research process question first.
Sure. In terms of the research process, again, I think frontier markets, because of the dearth of available information and the unique characteristics of each market, you cannot invest in these markets without being on the ground. Now, while we do not have offices on ground in these in markets such as Pakistan or Bangladesh or Vietnam, we do adhere to a very strict travel schedule where we try to be at least in each of our markets 2 to 3 times a year. Being in the space for almost 8 years has allowed us to build a lot of good relationships, which actually benefited a lot during the COVID period, where our actual physical presence on the ground has been hindered. In terms of businesses, what we look at, very similar to what Mattias said, I think for us, the starting process is usually the theme. It's not the valuation. The starting point is, what is this business? Would I invest in this business for the next 5 to 10 years? And what are the key drivers behind it? How sustainable is this theme? The second thing, again, in frontier markets, you have to be very careful with management, especially because the regulations can be a little bit lax at times compared to developed market standards in terms of accountability or codes of corporate governance, etc. Especially when it comes to minority shareholders. So you really want to know who you are. It's sort of like a private equity approach to public investing. You really have to deep dive into your businesses, and that's what we believe in. And then the last thing, I guess, is always when it comes to the numbers. For me, the starting point always is on the cash flows, and because that's always the most telling sign of a business, of how they actually allocate capital. And for me in particular, I think it's always to look not only during the good times, but also during times of economic distress, how this business has been able to manage, because that shows character, not only of the management, but the resilience of the business during times of adversity.
Great. So I think there's a question that's been asked twice, and so we can start off with that one and maybe just add another one to the tail end of that is, why do you choose public markets over private markets, given that there may be more opportunity in the private markets in these countries? And to add on to that, just what's your perspective on Bangladesh as a country? So we can start with Mattias on this one.
I think it's a very good question, because I think a big problem in our markets, and the reason why they have not performed better, is that generally the corporate quality of the listed companies is worse than it is in developed markets like Sweden or US. So I think that is the first aspect, and that is why for us it's more important to find good companies than to try to pick certain macro trends, etc. So it's a very relevant question. I think on versus private public markets versus private markets, I think and a little bit as Ali said, that many of these markets in terms of liquidity, in terms of capital market access, I think you can almost view them as brownfield investments in many cases. So I think it's our experience, and if we look at, for example, Pakistan, where you've had so far very few successful private equity funds involved, I think it is that opportunity will probably come when the public markets are better developed. And I'm sure there are exceptions, etc. But I think for now, given the low development of the capital market so far, I think for us at least, there's no need to go into private equity markets.
Okay.
Yeah, so if Ali, if you want to talk about that, that's fine. We're running a little low on time, so we could also move on.
Yes, just briefly on. In fact, prior to joining Fim Partners, I was working at one of the largest private equity funds in Pakistan, so I can give you a more direct insight. The problem with our markets, and not just Pakistan, especially on the private equity side, it's very easy for someone to take your money when you're offering it, but it's the exit routes which are much more complicated because these are nascent capital markets to begin with. So the listing option, which is very popular in more developed markets, may not be available because of the ticket size tends to be typically smaller. And the other thing is the regulatory environment, which may not be conducive to exits. And this is not only just markets such as Pakistan or Bangladesh. India has been a market where a lot of private equity capital has been stuck for years because of the exit regulations are not exactly favorable to foreign sponsors. I think there was a question on Bangladesh very briefly. Just touch upon it. I think the potential of Bangladesh is immense. If you look at how that economy has maneuvered itself in terms of a world-leading export house, in terms of textiles, strong balance of payment position, etc. I think the risk, though, with Bangladesh again is more regulatory. Most recently in the COVID crisis, we saw the imposition of a market price floor system without letting the market freely float is just one example of that. And then we've also seen a very intrusive regulator in some sectors, particularly telecom, where the rationale for certain regulatory actions seems more political rather than based on the facts. But but I do believe there's a very good potential in that market, but there just needs to be some reform on the regulatory side for it to truly realize its potential.
Great. And I guess I'll combine two questions as we close off. There were a couple of questions about Pakistan and Turkey also that were related to either currency risk or the potential for currency appreciation. So I guess the question would just be, how much does that play a role in the investment choices you make? And the final question that I wanted to end on is, how would you suggest getting into the sort of work that you do, considering that this college is mostly made up of MBA students who may be interested in working in emerging markets, but there's not necessarily the same straightforward path into, doing what you do as there would be for, joining a large bank. And yeah, Ali, you can go first on this.
Sure. I'll take the last question first. You're absolutely right. This is a space that tends typically to be dominated by boutiques larger than large caps. So the opportunities are definitely few and far between, but I wouldn't discourage that. I think the space is definitely growing. Even though AUMs have shrunk over the last 5 years overall, I do see that trend reversing. That means opportunities are going to be coming by. The one thing I would advise any person coming into this space is quantitative skills can be acquired by anyone. It's the qualitative skills. So there is no manual that's going to teach you what's the, there's no homogeneous way to invest in these markets. Each of these markets are unique. I would advise anyone who's coming into these markets is to come with a very open mind. There's a saying we have on our end, which is think like a local, invest like a foreigner, meaning you have to understand the local dynamics. Don't think like a foreigner coming in, because you would never understand the opportunity set there.
Okay, so I think you mentioned, first of all, kind of the general risks on a macro level. I think it's important that you mentioned that, although I think for me, after these almost 25 years investing in these markets, I tend to kind of end up that good companies, they managed most macroeconomic conditions, and they thrive in crisis, and they build their market shares, whereas bad companies, they wouldn't survive the best circumstances. But what we do look for generally on a macro level is rather disruption risk. And disruption risk could be, for example, if we see an overvalued currency being kept up by the central bank, or unsustainable economic policies, etc. So it's rather kind of the big changes that we look for. Because in normal circumstances, and that's one of the first things that I tell investors, that they mention all the problems and the corruption and all the risks and the currency swings and all that, but that's the everyday for the companies we invest in. That's what they're used to. That's what they used to handle. And the good companies, they can adapt to those circumstances. So I think it's unfortunately an overemphasis on all the problems in these markets. The problems also means opportunities for the good companies. In terms of advice, I think one advice that I have given to a couple of investors, or a couple of students that wanted internships at Tundra, etc. And what I recommended was to try to find a little bit, as Ali said, that I think the qualitative skills, getting to know these markets, that's almost the most important thing. So one student that asked me about advice, I told him to try to get an internship at the local sell-side firm. And he actually did. So he ended up at the Vietnamese stockbroker. And I think those skills is what guys like us will require. People that really that lived in the countries, that got to know the markets, that understands the mentality. Because only after that, you can properly assess the opportunities that are around. So that would be my recommendation. If you have the time and if you can live with a minimal salary for a couple of years, that is what I would do.